to shorten your lunch break to join us for this amazing panel. I'm really honored to have such amazing panelists with me on stage about these very innovative topics about new trends with regard to payments with final rails. And so what we'll do is really to shift about understanding what are the new use cases, what are the main opportunities and challenges related to payments, settlements, and now we see that day after day we see many consortia, we see many projects that arise in many jurisdictions, including EU, EMA, and US. And so just to start, I'm inviting the guests to present.
Good afternoon, my name is Paul Worthington. I lead public policy for Stripe in the UK. Stripe, we provide financial infrastructure for businesses to build on top of, from processing payments to embedding financial services and increasingly in the crypto and stablecoin space as well.
Thank you so much, Paul.
Hello everyone, my name is Alexandra Soroko. So I'm leading crypto stablecoin products for Visa Europe. So covering all activities that we have about crypto card issuance, stablecoin settlements and payouts.
Por eso digo, ¿no? Con la que vaya con las tarjetas en la mano. Ya veo que para él va a ser un problema. La tarjeta ya está.
Claro, yo tengo que tener esta tarjeta localizada, es la mía.
Nice to meet you all. My name is Primor. I'm working in Clarity Global. Clarity Global is a regulated Canadian EMI that helps businesses to transfer funds, cross-border payments. And our role in this industry, I would say, maybe join here with the market leaders, and I would say to connect traditional banking, fintech APIs, and multi-rail payments into one unified experience. This is what we're all about. In one word, I would say orchestration, and we help to connect all the world together. Thank you.
Hello everyone and welcome. I'm Gisli, the CEO and co-founder of Monerium. I believe we are all here collectively to bring the world's economy on chain. Our mission is to tokenize the most obvious asset, fiat currency. So as such, we are a regulated stablecoin issuer out of Ukraine, with currencies like euros and pounds and soon dollars. Last year we commanded more than 50% of the on-chain volume for euro-denominated fiat-backed stablecoins. And it's a pleasure to be here with all of you today.
And just to finish, I'm presenting myself. So my name is Stephane Blemus. I'm working for the global law firm White & Case. And so we are advising various projects related to digital assets, whether it is on capital markets, regulatory, PIT, M&A. And so I'm very glad to moderate this panel. Maybe to start and to set the stage, we will potentially discuss at first about this transition to the use of new technologies of what's been called broadly payment 3.0, and maybe to ask the panelists what their things, what their experience with regard to these new use cases, both with regard to opportunities and potentially the main challenges that they perceive today. Maybe Dorothea?
Okay, fantastic. Well, in general, just to set the scene, I think Mastercard sees himself for now as being the bridge between the fiat and the digital assets world.
So we are enabling end consumers like yourself, like we're sitting here, to move your funds from your bank account to a digital asset platform in a safe and compliant manner with a debit, credit, or prepaid card. In the same way, we also enable you to off-ramp that in a safe manner with a product that has been in the market for a long time, a card, but we have basically renewed that product, revamped that product because we added a new funding source. So you can now basically use your Crypto.com OKX account, your Binance account, like we've just launched in Brazil, attach a card to it, go to the point of sale, and pay your coffee on a daily basis, again, in a safe and compliant manner. It really, that is our main focus at the moment, allowing our customers to have the choice to use the funding source they want to pay the way they want to across the globe, 24/7, all year round. This is what my team is building currently. However, we are expanding our focus more also into the stablecoin space. We are enabling stablecoin settlement. We are allowing our customers to settle with us in stablecoins. We are looking to integrate that in our overall settlement products as well, to not just focus on digital asset players, but also traditional financial institutions. We are enable stablecoin cards, and we are very active and working with our customers on a day-to-day basis to figure out what are the new use cases that end consumers would like to bring to life, so we can actually enable that choice.
And Avner, maybe, do you see that trends as more a revolution or an evolution from your perspective?
I think it's both. I think it started on the Mastercard side definitely with an evolution of our products. So we recognize that there is a demand to be able to spend digital assets, digital currency, cryptocurrencies, or stable coins at the point of sale. We use that technology to upgrade, improve, make our products better, but also with services such as crypto credentials, we innovate, we bring to the market new products that are digital asset native for credential verification. Or with the multi-token network, we allow our customers to also engage with the digital asset space in a safe and compliant manner, not just digital asset native companies, but also traditional financial institutions. So it's both. It's an evolution of the products that we have, but we also bring new products to the market. Yeah.
I completely agree with Dorothea. You know, thinking about the shift from payment 2.0 to payment 3.0, I would say it's completely an evolution, you know, from talking about technologically and, you know, evolution that is natural in the business, in the market. However, I think that this time the impact of the shift from payment 3.0 has a revolutionary impact. And this is, I think, the name of the game here. And you know what's driving this impact is basically the clients. We are looking on clients with multiple use cases, and basically the clients are the ones that are deriving this entire shift. And you know, we need to adapt, we need to adjust ourselves, we need to integrate additional solutions and additional rails in order to be able to allow our customers basically to use this and it became a kind of a business necessity for them. So we must adopt, and this is why I believe that the impact is revolutionary.
Oh, thank you. And in that gradual transition, Alexandra, where do you see potentially some key use cases from your perspective?
So if I may first, I come to state how we see that, because I think it's important to relate it to the evolution in the sense that Visa philosophy for quite some years is the network of network positioning. So you know Visa brand as a card network maybe, but we already have accounts and traditional mobile wallets which are integrated. So we can pay from and push towards. So the first thing. So the way we're approaching crypto stable coins is how the technology expand our network, but also allow the users to basically benefit from our network. So it's exactly how you can connect a card to your stablecoin wallet, so we can spend in 150 million point of location of merchants where Visa is accepted. That's the first thing. And the second also, how we can integrate stablecoin settlement in our current VisaNet network. So using what is already there, but implementing the advantages with stablecoin do bring, like 24/7 payment, one aspect. And another one, which I hope we develop further, is the programmability. And so about the use cases. So first, cards. I mean, we are at pair with this approach, but it's definitely important to make it usable and simple. The UX is a big question, I think, in generally stablecoin and crypto. So how make it simple to spend the balance which you have? The first thing, and also how to reach out all the stablecoin wallets. So we're working also on the use cases like push to stablecoin wallets. So benefiting from existing Visa infrastructure, how we can access new additional endpoints when money can be received.
And Paul?
Yeah, so from a technology perspective, we at Stripe, we see two technologies that are really acting as tailwind for economic growth. One of those is AI, and the other is stablecoins. So what we're trying to do is try to bring those technologies forward to today to enable our users to adopt them in their operations going forward to expand their businesses. So from a Stripe perspective, we've had a long history, and we've actually grown up alongside crypto. The Bitcoin white paper came out relatively shortly, just before Stripe was actually founded. And we have tried in the past to experiment with these technologies from a payments perspective to see if they can operate at scale. So we initially turned on Bitcoin as a payment method back in 2014. At the time, it didn't really get much adoption from merchants or users because it just wasn't a very good payment method, frankly. Fast forward to about 18 months ago, we enabled merchants in the US to be able to accept stablecoins as part of their business. So, as a customer, I can go onto your website and use stablecoins to pay. And what was really striking from that, from our perspective, was that in the first week of us enabling that feature for merchants, we saw more volume processed in 1 week using stablecoins than in a year and a half of when we had enabled Bitcoin back in 2014. So directionally, it really showed us that the technology had A, matured, but B, there was a real moment of opportunity here to put this technology in the hands of our users. And what does that mean today in terms of what we're seeing? Well, look, it's still early. However, some interesting data and numbers that we're seeing today are that if you are a merchant on Stripe in the US and you're enabling stablecoins as a payment method, you're accessing customers in twice as many markets, whereas if you're a merchant who's not enabling stablecoins. So what that says is that stablecoins are enabling unlocking opportunity for cross-border commerce that wasn't previously there. And also the value order of customers who are paying with stablecoins is actually 3 times the average of a regular customer. So it's about expanding the channels for merchants, giving them opportunities to expand into new markets, and also getting actually higher value order flows through from that. So from a merchant perspective, this is, in terms of the title of the panel, for us, it's about enabling a new type of infrastructure on top of what we already provide around traditional payment rails that offers new opportunities and channels for merchants today on Stripe.
Thank you so much, Paul. We discussed about the opportunities from a stablecoin issuer perspective. Maybe, Gisli, from your perspective, what would be, on the other hand, the key challenges, notably on the business and the tech side for stablecoins?
Yeah. I agree here in the short term, this is an evolution, but I believe in the long term, this will be a revolution. So right now, we're at a stage where we're kind of recreating everything we have in TradFi. And some of the use cases that we've seen, if you had asked me a year ago, I would have said something else. If you had asked me 6 months ago, I probably would have said something else. But we're at the stage where we're connecting the TradFi rails with DeFi rails. So this means Monerium has, for every customer, a SEPA connection, so every customer gets an IBAN account for their wallet, and you can seamlessly just on and off ramp through that. We have partnerships through partners with both Visa and Mastercard, where the tokens become now spendable, as they've explained. So we're slowly getting to a stage where we're on par with regular finance. And I think what we'll see once we start to see more of the assets tokenized, and we can go into that a little bit later, we actually start to see some sort of a network effect among the assets on chain, and this is when the real revolution will start to happen, right? You mentioned from a tactical perspective, I think we've actually solved a lot of things. When we kind of issued the first euro token back in the days, a single transaction cost $80, right? Today, fast forward, everything is, for pennies. It takes seconds. It's you can go from a bank account to an on-chain wallet in 5 seconds or less for a fraction of a penny. The remaining thing that I think needs to be solved is kind of abstracting all the chains. That's one thing. But the real thing is kind of privacy. Because from a regulatory standpoint, it's great when we showcase all the tools that we have to kind of monitor all the transactions and how they relate to other assets. The banks actually just get envious. But at some stage, this is going to become problematic because not every business will be able to transact in public, right? So I think that's one of the remaining technical challenges, which maybe goes into also kind of regulatory challenges. Like, how do we actually make it so that companies and individuals can transact in privacy from other competition, but at the same time allow for regulators to have the compliance oversight? So I guess that's the remaining technical and regulatory challenges.
Oh, thank you, Gisli. So we have set the stage about understanding this gradual transition, and for sure, these new financial rails are really pitched as instantaneously interoperable and compliant. But what's the ongoing roadmap, and notably, how could these new financial rails potentially be integrated into traditional ones, and notably through existing payment networks? Maybe, Dorothea, it would be interesting to have your view about this integration as a journey.
So, as I said before, I think we see it both ways. It's an evolution of of the products that we have to enable choice. So we integrate proactively the option to spend digital assets at the point of sale across the globe with our card products that we have in the market, physical, virtual card, any market. We took this even further. We typically are used to work with centralized financial institutions, obviously, but we have now with MetaMask developed also the decentralized card, enabling the dispense through via smart contracts. So here you can see how we're actually working with those players to bring the digital assets into the payments world, to connect those two worlds as well. Why are we doing this? Because the end consumers have been pushing and demanding for it, and we see the value in actually driving that choice. Coming to the point, the second, I think, very interesting use case that we recognize around stablecoins specifically is remittances and B2B cross-border transactions. So we're, again, here, we are upgrading, in a way, our product by integrating the stablecoin technology in our move across remittance product. And then we take it a step further. We're exploring how we can use stablecoin specifically to make our offerings better, to offer new services, to basically make payments efficient overall with regards to settlement, maybe with regards to collateral. But not only, and that's, I think it's very important to remember for digital assets player, because my team mainly looks after digital assets player, but the innovation coming out of this is for the broader payments ecosystem overall.
Thank you. And with regard to notably the topic of cross-border payments, Paul, what is your views about the use of such new assets such as regulated stable coins, tokenized deposits?
Well, what I'd like to do is try to contextualize what developments we're seeing, like from a policy and regulatory perspective, in the context of the question, which I think is a really interesting way of doing it. So, from a cross-border policy perspective, look, what we're talking about here is the need to improve payments, and really a lot of the use cases here are cross-border based we're talking about. I think from a policy and regulatory perspective, there's general agreement that the current state of cross-border payments is not fit for purpose. I think that really gained prominence back in 2019 with the advent of the Libra project from Facebook. That set off a whole wave of regulatory and policy initiatives, things like the Financial Stability Board's task force on cross-border payments. And so I think there's a diagnosis of the problem that we need to improve cross-border payments. And then now what we're seeing is different diagnoses of the way to go about that, and the different products and projects and initiatives that are stemming off the back of that. So part of that is about the regulatory regimes around stablecoins, which we've heard a lot about already this morning, whether that's MiCA or the Genius Act in the US. So there's stablecoins as a solution to that. You're also seeing innovation in forms of digital money around areas like tokenized deposits. In the UK, for example, where I reside, the Bank of England is very pro tokenized deposits from a banking sector. You've obviously got a whole agenda around the future of central bank digital currencies, which I won't go into in much detail today. But then you've also got some really interesting global collaborative initiatives going on around how to improve, say, correspondent banking through tokenization of central bank money, which the project Agora, which is the Bank for International Settlements, is running, which a lot of central banks and also private sector players are heavily invested in terms of how to upgrade the way correspondent banking payments work today. And then also, maybe less relevant for this crowd, you've also got interesting work going on in terms of cross-border payments related to traditional payment rails, in the sense of how to integrate real-time payment systems around the world. And a lot of that work is been driven out of the Southeast Asian markets. So the reason I say that is because you've got these different projects, initiatives underway, which will offer new opportunities for how cross-border payments can be conducted. And so you're going to end up with, and this is a phrase the Bank of England's coined, not my own, but like a multi-moneyverse world where we'll have different forms of digital money, and it will be, on providers and platforms like Stripe to enable the different opportunities for businesses to use those for different use cases, for different purposes, and things like that. And one question and a buzzword that's increasingly popular right now is this whole interoperability. And it's not just interoperability between different kind of digital assets, it's also interoperability between all these different types of cross-border payments. And I think that is kind of like something that we'll probably see much more resolution and clarity on in the coming years.
Maybe to pick up on this point, I think that's actually very true. We talk about like technical interoperability, right, between chains and all that. But I actually think one of the things that doesn't get talked about enough is the interoperability between different stablecoin issuers and how that actually gets solved. And I know that Stripe, like you guys you're in a position where you can play a huge role there, but there are also other things that can come into play, like using the technology itself to move the collateral, the backing of the stablecoin, between the issuers. And I think that's where CBDC will actually come into play, not as a retail product, but as a wholesale product between the issuers of tokens that are regulated in their jurisdictions to make it kind of very efficiently transferable cross-issuer boundaries and geographical boundaries.
I believe that also, in terms of the interoperability, also between regulators. Super important, eventually regulator, we are here, we are developing, we're moving forward, and eventually regulations will be the place where scalability becomes a thing. And I believe that the regulatory landscape must be unified also in the same sense of the interoperability, in order to allow us to scale. Eventually, we are driving as a startup, I can say that we are moving fast. We have the opportunity to be very agile and very fast, talking about multiple integration and to do, to take all of them together. But eventually, in order for the entire ecosystem to scale, this is what we need.
What I wanted to pick up on that is I think we will be living in a different form of money generally. And stable coins will be like different features of stable coins will be more important in one geography compared to another geography. So for example, when we think about Europe, we have real-time payments. So it's less we need to solve for stable coin, or we have a stable currency. We don't need to leverage the store value functionality of stable coins, which is used by the emerging markets. However, exactly, cross-border payments make sense, and programmability will definitely play an important role. And so there will be a coexistence. The other thing is also, for today's stablecoins, they don't solve for all the problems neither. So it makes sense to do in a certain amount of payments, but you don't want to make atomic payments on a Forex exchange multiple times a day. It's inefficient. So I think every form of money and stablecoins, like one of them, will find its niche, driven by a geography, and what real problem does it solve. So going back to use cases. So collateral, I think you were mentioning about collateral. Of course, this is one important thing that it can be solving. Or 7-day settlement, which today fiat rails doesn't allow, and we enable stablecoin settlement because actually our clients can settle with us 7 days a week. So that's very important. And so depending on use case, that's going to be, the stablecoin will be a choice, or maybe sometimes not.
Thank you so much, and maybe we'll deep dive on this issue of value, and notably with regard, we talked about innovation with regard to regulation, with regard to the types of assets that are used, but maybe also innovation with regard to user experience and business models. So maybe to understand, where would you identify the value in those modified or updated Pioneer rails? What kind of value do you see for retails, for financial institutions, for many corporates from your side?
Well, I think it's very important to come to the world when actually users don't know about stablecoins and which rails are being used. So it's actually very convenient for them and simple. And today we're not there, because even when we say it's possible to have a card next to a stablecoin wallet, but it's still not easy to use that. It's easy to spend, but it's not so super user-friendly to get to that point. So that's one thing. The other thing, in a cross-border payment, in ideal world, the sender and the receiver don't know there's stable coins underneath. They just instantly receive the money, and there are providers who are doing that in one case, or in another case, one send fiat and the other side receives stablecoin, and it's easy for both sides. That's a direction where we're going to actually create an abstraction from rails. So it's possible for our clients to use Visa providing the rails, and depending on who wants to receive fiat and stablecoin, both are possible.
We actually see the quality of our partners has increased dramatically over the past few years. So from the user experience perspective, I absolutely agree. What needs to happen, everything from language to addresses to private keys, all of this needs to fade to the back. And for the user, for the time being, it's kind of, you remember the phrase like, what was it, like fintech in the front and DeFi in the back. We're currently at that phase. But we're seeing high quality teams coming out of, Revolut, Klarna, all of those emerging that know how to build product, where they don't talk about like a DeFi thing, they just talk about savings accounts, and they're recreating the experience. So I predict that, neobanks on new rails, especially when you have the capability to like transact with your old friends who aren't yet on board, through SEPA connections, through card payments, through all of that. Like for fintechs of the world, the blockchain should be the native rails. And I do believe, and we are seeing that happening right now, new neobanks being built on top of those layers. And the cool thing that we've observed in our conversation, why these teams are building on blockchain rails, essentially because they're not holding custody, right? That means that they don't have to be regulated in their jurisdictions. They can partner and recreate the user experience of Revolut or PayPal or whatever with like a team that is like 1/10 or 100th of the teams that they belong to in the TradFi space.
Yeah.
I love that point. Oh, do you want to go in?
Yeah, I just want to say something also about adoption rates. How do we actually get to customers to adopt it? For us, it's actually three things: the user experience, and improve user experience also maybe via partnerships, regulation, and use cases in general. Now, user experience, I think we all agree, especially in some decentralized platforms, it's still tricky. That's why I think it also makes sense for those platforms either to partner or also have maybe work also with another traditional financial institution who has actually figured this out, with the likes of Revolut. And they're doing it. Now we see this convergence between DeFi and CeFi as well. And we see more traditional financial institutions actually adopting digital asset native use cases overall, with JP Morgan, with Deutsche Bank, with SocGen also issuing their own stablecoin. So I think this will also help getting end consumers in general more comfortable. They already own those end consumer relationships as well. Regulation is key. I think we have seen it in Europe with MiCA. We have seen it with the Genius Act in the US. The market has picked up massively in the US because they built this clarity. And then, of course, use cases, meaningful use cases. Just because it exists, the technology, doesn't mean it's also a pain point. No, it has to have a meaningful use case and so forth, and then the adoption will come as well. So I think this is where we look at from our point of view. And I think we also have to realize that we're pretty early in the whole adoption rate, depending on the stats you're looking at. Around 6.8% of the global population use digital assets or own digital assets, 550 million. There are around 220 million active wallets out there. When you look at it when you compare it to the internet, it's where we were with internet adoption rate around 1999 and or early 2000s. So we still very, very early in this journey, and I think the industry overall has made tremendous developments over the past couple of years and gotten a lot better, but I think there's a lot more to come in terms of innovation, in terms of how we can get better together as well.
I really wanted to just build on the comment. I really agree with the idea that fintechs can build on top of this new infrastructure, like quite a small team to be able to do this. Without getting too academic for a second, look, if you think about the three core attributes of what makes up money, so you've got unit of account, store of value, and medium of exchange. And what we're talking about here is innovation in the medium of exchange, as in the payment, and that's happening in tandem with innovation in the form of digital money, whether we're talking about stablecoins or we're talking about tokenized deposits. And why is that interesting and relevant here? Well, because if you look through history, there are a number of examples where there's been innovation in forms of money and payment that have been responded to the economic needs of the time. And I think that's really interesting because what you're seeing today is stablecoins, for example, step into a gap where there is friction in cross-border payments, where it's not working the way that businesses need today. And so that's the technology responding to the current friction. But there's also a second other side to that equation, which is that there's all the problems we see today and what the technology is aiming to solve. But then there's also the things that we don't know yet which will be built that the infrastructure will provide the basis for. And we've got examples of this even recently in Europe where we can point to. So if you think about PSD2, 10 years on from PSD2, we've got this whole wave of non-bank payment firms, open banking as a sector. And it shows you that, and we see this at Stripe, a number of the business models that we support today from our users are built on things like subscriptions, platforms, marketplaces. You couldn't make, these didn't exist before the internet and the type of native internet payments that we offer today. So I think what's going to happen in terms of a value perspective, to come back to the initial question, is that there's the value we can see today filling the gap from the friction, but there's also going to be this wave of fintechs that will build on top of the infrastructure and build new products and services that we actually just don't know what they are yet. And I think that's the really exciting aspect of this, and that's why we're so excited about trying to put this technology in the hands of our users as quick as possible.
Yeah, and I absolutely agree with that. That's what I meant. Like, we're very, very early on in this innovation cycle. It's basically, as I said, where the internet was in 2000. So what it's coming in the next 5 years, nobody can predict that. But I think we need to keep an open mind. We need to be open for innovation, try out new things. Not everything is going to work either, no? But that's how we learn. That's how we get better. That's how we bring better products to the market.
What I would say, we are all talking about the challenges of, enhancing the user experience. And we are trying to make the payments become kind of invisible for the clients, for the user experience. And when all of this is becoming invisible, what the value that become visible, I believe, is the trust. I was walking around here in the conference. Almost every stand here has the word trust in it. And it's becoming so much important. The trust in the system, who is behind everything, who is behind how to connect all the rails that we're talking about, all the CBDCs and all the new products that you are talking about. Trust is a big factor, and this is the value what we see. We are hearing it from our clients all the time, and this is the value for me, that we need to keep the trust of the clients in the process.
Thank you so much. And even though we, in various instances, you said that we are in a step-by-step process and that it is still early stage with regard to these groundbreaking evolutions. Nevertheless, if we project ourselves maybe in 5 years from now, and even though it's still difficult to project at the very least even a year from now, what are the key elements, what are the key perspectives that you would have with regard to the evolutions both on the payment side, the infrastructure side, with these very moving topics, both from the way the industry is tackling this project, the way public stakeholders could interact with private ones in order to assess their own products themselves. What are your views in this 5-year step?
You want I can thinking even before 5 years. I think one of the important part which to think about stablecoins is today we talk about that as a payments, but and which is solve many problems, but not all, because fundamentally it remains a debit instrument. You need to actually have money to send the money. And one of the big parts which exist in a global ecosystem is actually the credit. So especially when we go to enterprise payment in the big companies, it functions with a credit lines. We pay suppliers after 60 days, 90 days, etc. So I think the big potential, and especially for the markets with a stable currency and resolved fast payments, like where we are, the programmability element of stable coins and the ability to bring lending as the way of using stablecoin will be super important. Just want to hit you one of use case and example to get an idea how we today already doing that. Think of a partner who issue Visa cards, a Visa credit card, so they can basically lend stable coins to pay us against the receivables of the users of this stablecoin backed card. That means they don't have money yet, but they will have a receivables from their clients. They got the money from a lending protocol to pay Visa. So we will see, I think, a lot of lending new financial products related to credit. And when those two things will be combined, and it will be a big question, who will play there? DeFi protocols, new players, or bank will learn how to play in this game and basically adopt the marketplace model which DeFi are. Like, Paul, to your point, how internet brought all the marketplaces to retail, is this model going to be in a financial world? That will be very interesting and very important to see.
I agree with his sentiment. As I talked about earlier, I think the true unlock comes when we have all the assets on chain. I used to work as a bonds broker, and it still amazes me how bonds are settled across the world, like how much liquidity you actually need and how costly it is. You never see this, of course, because it's all hidden behind the scenes. But like we talked about, like the importance of different kinds of stablecoins, different currencies. And I think this is one of the key reasons, actually, why even though we have a real-time payment system in Europe, for example, we need to have the money lag on the same form as the lending, because as we've seen in DeFi, we've had like crypto markets, where they rise and drop, and DeFi just continues to power through liquidations, work flawlessly almost, because there's no human making decisions in the loop. It just works, and this is the reason why you need a stablecoin as opposed to some other system. It needs to traverse at the same speed. And in the next 5 years, I think we'll start to see a lot of the other asset classes being tokenized. And we'll see some interesting use cases where you can start to do real delivery versus payment. You can start to do a lot of interesting things. And my hope is that by the end of the next 5 years, we will start to see not us just recreating what exists, but actually through some of those startups that will emerge, like with permissionless, they can build almost permissionlessly, we'll start to see some of the first use cases that couldn't actually have been realized in the TradFi world. I don't know which one those will be yet. Is it going to be kind of AI agents? Like, that could well be. But I actually expect at the end of the next 5 years, we'll see something completely new.
I believe, following up on your point, the next 5 years, we are all sitting here. I believe that we represent a kind of a full spectrum of what Payment 3.0 is, how it's becoming real. And looking ahead, through partnership, eventually through collaboration between different players, making this ecosystem enhanced and full. You mentioned that you don't know what will be in 5 years, but obviously there will be something. And like anything, innovation comes from the day reality. And for us at Clarity, we see on a daily basis this business necessity, those needs for businesses to move funds to cross-border payments. You mentioned that still, the off-boarding and on-ramp, off-ramp is still a challenge. It started with this, but obviously it will be solved and it will continue. And like anything, also here, I believe that the business demand will be the one that stating the page of what's going to happen next.
Yeah, I think from my side it is adding on what you said before, making payments invisible. I think making payments frictionless is my point of view, including using the benefits of digital assets overall and stablecoins, making it easy for the consumer to engage and be able to spend. That is number one. User experience improvement on the off-ramping side as well. For this to happen, I think we need to see more on the merchant side as well in terms of adoption. I think we've mentioned it before that it has mainly started on the retail side with the end consumer, with the trading and so on and so forth, but for the circle to close, for people really to be able to use the stablecoins and the digital assets to their full extent, at some point the merchants also need to become more comfortable accepting it. I think we will see more of that happening, and we're having more and more conversations with merchants overall being open to accept digital assets at the point of sale. You have mentioned it as well. Overall, I think stablecoins have also an infrastructure component. So I think more and more of this will come. I think I can see that the traditional financial institutions are actually realizing that as well through either as a new revenue stream, issuing their own stablecoin, using it as a settlement tool like we do, improving their remittance products. And then there's the whole tokenization of real-world assets. And that has massively ticked up over the past couple of months with BlackRock, JP Morgan, NASDAQ, and so on and so on. So I'm very curious to see what is coming out of it, but I think we will see a lot of movement and development and innovation, hopefully for the benefit of the end consumer, making assets more accessible, easier to trade, infrastructure cheaper and more efficient.
So as an ex-regulator and policy nerd, I'll try and give my predictions in that space, if that's okay. So look, 5 years ago, so let's look back before we look forward. It was only September 2020 that the EU actually published its first draft MiCA proposals. I always remember that because actually they published it the day of my birthday, so it was kind of a nice happy birthday from the Commission. So it just shows you like where we are with MiCA implementation today to where we were like 5 years ago, and we were really just kind of like getting into it. So if I fast forward 5 years from today, I think look where we are right now, like from a policy and regulatory perspective. You know, we're either in the phase of implementation or design of various stablecoin regimes around the world. MiCA is obviously in force. Genius, we've passed the legislation's been passed, but we're in the rulemaking phase. The UK is further behind, still in the draft process. So there's been a lot of focus on the domestic regimes, and that makes complete sense because it's getting that domestic regulatory framework in place. There is definite recognition, and I think this is becoming more a prominent part of the policy discussion, though, that what does the cross-border international regulatory cooperation and framework in this space look like, given the global nature of the use cases and businesses we're talking about? So we're starting to see that conversation emerge in the context of the EU in terms of what does future mutual recognitions or equivalence look like. It's in the Genius Act for the US to consider that, and also only last month the US and the UK actually announced a new initiative a new task force to look at potential regulatory alignment when it comes to digital assets, including stablecoins. So it's very much a topic that's come up the agenda. It won't be something that has a quick fix, but it is going to be something that I think in 5 years, with the continued growth of the market and scale of adoption, that we'll need answers to ensure that businesses can scale and not get caught up in this, whack-a-mole of national regimes that don't like talk to each other. And that doesn't mean we're talking about harmonization. It means we're talking about potentially even like equivalence or same regulatory outcomes. So you can have different rules, and it won't even be that all aspects of this space probably need to be mutually equivalent anyway. You'll be certain things you want to focus on. Maybe, for example, the reserve backing assets, as opposed to some of the things like consumer protection, just as an example. So I think that would be where I hope we'd get in 5 years. If I could have one more, it would be that there will be increasing awareness, confidence from the regulatory community about how to really leverage the power of things like blockchain analytics for improved compliance, and reimagine what AML controls and things like that can look like for payments in this space. There's movement in that space, but I think in 5 years I'd really hope that the regulatory knowledge and uptake and policy agenda is really sped up as well.
Thank you so much, Paul. And as we won't be able to solve everything about interoperability and equivalence during this panel, maybe we'll try to have at the very least interoperability of the closing remarks of the panelists. So maybe I'll ask to each of the panelists some keywords for the audience to end, unfortunately, our panel.
Who wants to start? Okay. As I said before, I know for all of you probably here, and also for myself, it sounds like this industry has been around for ages, but that's not the case. No, I think I have to remind myself every day. We're still very early on. 220 million active wallets is not a big number in the grand scheme of things. So there is still a lot of innovation coming. We have come a long way. Keep an open mind, work together, collaborate on the CeFi and the DeFi side to bring the meaningful use cases to life for all the end consumers.
For me, I would say that the one keyword I would want to leave you all with is bridge. In the sense of we need to bridge to be able to bridge between different technologies, between different rails, between different architectures. I believe that this is where we position ourselves at Clarity, in a place to be, I would call it like the connecting tissue between different rails, between different settlements, and to be an enabler by bridging all those technologies and all those rails to enable our clients everything that they need, eventually.
Yeah, I would maybe just like to call on all the builders out there. I mean, I think we mostly have many of the components already, solved. We need more user applications, user-facing, that are comparable to what they use in TradFi. So I would actually just like to use the opportunity to call on to everyone in the audience who's actually building something. Like, yeah, that's my call. Like, join the evolution. It will become a revolution.
Can I also jump in there? Because I'd also like to make a similar appeal to any builders listening, which is that I think the phrase I'd like people to take away from today is global from day one. And what I mean by that is at Stripe, we are seeing fintechs build on top of this infrastructure and thinking about business models and operating globally from the get-go. And if you think about previous generations of fintech, like 10 years ago, it was like a local from day one. And I think the kind of technology and infrastructure underpinning this this evolution is actually enabling that global from day one mindset. And that's definitely what we're seeing at Stripe. So yeah, global from day one.
Can I add to that? If you remember the days of the early telcos, right? When it cost something like 10 euro cents to actually send a text message. And that kind of defined the behavior of us using this technology. And if you, God forbid, had to send the text message abroad, you'd pay a leg and an arm. What happened was that the internet kind of allowed everyone to exchange globally from wherever you sit in a peer-to-peer manner. And this is slowly happening with stablecoins and blockchains. And I do agree, I'm probably sort of the naive optimist. I hear my co-panelists talking about in 5 years we'll be, hopefully with the correct regulation. You're probably right. However, things tend to move slowly, and then suddenly. So I actually think the next 5 years could be way more interesting than we're kind of talking about here today.
So from my side, 3 things to take out of this panel. Interoperability will matter a lot. There will be many blockchains that may be stablecoins. Abstraction and user experience, super important, will be key for adoption. And programmability and credit behind that, the financing, that will be really transforming the financial ecosystem.
Thank you so much. I would like to thank the panelists for this fascinating debate. I think they deserve a huge round of applause.
And we are on time.
And just to tell you that the debate has only started, so feel free to continue the conversation after the debate. Thank you so much.